Hi everyone, welcome to today's video where we're going to talk about NEO stock. I know that a lot of you are disappointed with my somewhat negative point of view on NEO stock, but I have to be honest with you. I just tell you as I feel or as I actually see things right now. And my understanding is that the times of being like optimistic about NEO was like in 2021, 2022. By 2023, a lot of questions started to arise because they were already starting to promise. For example, I recall the discussions about 85 and 87 being cars that would sell in the tens of thousands on a monthly basis. Never happened. Then they mentioned that they're gonna beefing up their sales organization in order to satisfy 30,000 sales at the bare minimum every single month. That also never happened. We are, all the way in the halfway through 2025, and I would say that NEO's average sales currently is closer to 20 to 25,000 rather than like 35,000 as they mentioned a couple of years ago. You can see the delivery numbers over the past couple of years. Green is 2023, 2024 is blue, and this year is in the gray. And you can see that in best case scenario, second half of last year, the blue bars were around 20 to 22,000. And I would say we are now, since April, getting closer to averaging 25. So we are still well short of that target. And in order to also be profitable, NEO needs to hit at least, I would say, 35 to 45,000 deliveries on a monthly basis. But I also mentioned earlier in the video that the management is starting to say the right stuff. They started to do some positive things. For example, again, really important point of view is that they actually reduced their R&D expenses by 60 million from Q4 of 2024 to Q1 of 2025. There's also discussions to further reducing the R&D expenses, the SG&A. I'm a little bit skeptical of the reduction in SG&A. When it comes to R&D, I would say I could see it happening, potentially, reducing the number of cars. That NEO currently, think about it, they have like 15 different cars, right? If you're new to NEO, they currently sell around 15 different cars, one Firefly, one Onvo, and the rest of them being the classical NEO brand. And we also know that the Onvo L90 is going to be coming in anytime very, very soon in early July. At least for when it comes to pre-sales. But still, they are doing like 15 different models and averaging, let's say, in best case scenario, 25,000 cars, right? That's around 1,500 cars per model, right? And that's not, high enough volumes in order to be profitable for a company. So I would say I could see NEO cutting down on R&D, also partly by just reducing the number of cars. I don't think they need 15, especially in the main brand. I obviously understand that the Onvo needs at least 2 or 3. They currently sell the Onvo L60, the SUV, mid-size SUV since I think since September of last year. Now in a few weeks we'll start to see the L90, and also the latest news is actually that the Onvo L80 is the 5-seater version of L90, which I really like, because again, it means that they are like sharing a lot of technology. It's essentially the same car. It's just, I guess, different name. For example, Tesla has the Model Y, the 7-seater and the 5-seater is the same car. So I would say that's a really nice development, if that is going to be true, in which scenario where L80 and L90 are essentially the same car. So again, on the product lineup, they're starting to move in the right direction. But the one big criticism towards the management is like, why did it take so long? Like, how could it possibly take this long to understand that this company needed cost reductions? The stock price it's just like utter trash, right? Look at it, like over 1 year, 20% down, year to date, 22% down. And if you compare the peaks of 2021 or so, it's like, 90%, 85% down. So not a good look. And every single time throughout these past couple of years, you started to have somewhat of an uptrend, some negative happened. Usually the biggest negatives has always been the net loss. At times, there always have been about, in the past couple of years, like 600-700 million net loss, at times even closing on 800-900 million, and also a couple of occasions very close to 1 billion net loss on a quarterly basis. This had led the company to raise capital by different means and essentially increase the number of shares outstanding, and that is one of the big reasons why the stock price has been taking so much hits. Now again, they decreased the R&D expenses by 60 million, and there's some other good news as well. Look at the lithium carbonate price. The first time I've seen in a long time, many years, where the this price is actually down below 60,000. So potentially, I mean, this has huge implications for all of EV manufacturers. The battery cost is a huge one, and the price continues just to go down. I mean, if you haven't followed this channel, look at this 5-year chart here. You can see that there was a peak in 2022, 2021, and also 23. Then a sharp drop in let's say April of 2023, and since then we have steadily gone down and now below 60,000. So that is potentially super high implications for NIO, XPeng, Tesla, and so on and so forth. So I would say this is going to alleviate a little bit of the price pressure that we have seen. I also think that in a couple of years time from now, if NIO manages to hang in there, a lot of the smaller competitors will be out of the game. They simply cannot survive, which means that the price pressure in the long term should be positive. But the problem for NIO currently is that they are so close to, you know, essentially being at the bare, like at the limits of what the company can take. They cannot afford any more like mistakes. I mean, the window of success for NIO is like razor thin right now, in my opinion. I don't want to talk negative again. Trust me, I've been a NIO bull for the longest of times. I've been there since 2020, so it's a long time. But I'm telling you, like, the window of success is getting razor thin, because although they are, I mean, if they do everything correct and they manage with, let's say, half of the stuffs that the William Li always talks about, they will be in a good position. The problem is they simply cannot afford any more mistakes. Like, we cannot see the company having a couple of good quarters where they move in the right direction, they reduce the net loss, and all of a sudden you hear like William Li is gonna, I don't know, compete in space or in robotics or whatever it is, like, because this guy always gets, either it's the NIO phone, they spend a lot of money on that, and then they sell like what, 50,000 phones. I mean, think about the times where you had like LG and HTC. I mean, in the case of LG, you remember like 5 or 7 years ago, before they throw in the towel in the phone market, LG, they probably would have sold at least 10 million phones globally. And think about it, a giant company like LG, they throw in the towel despite them selling like probably 10 to 20 million phones annually. And then you have like William Li thinking, oh, you know, let's do 50,000 phone sales and that's gonna make us profitable, right? So he cannot do any of these, like, I'm sorry to say it, like, but this is just stupid mistakes. You might call me like a couch investor, sure, I might be like really on thin ice here, but I'm saying it as it is. Like, you cannot sell a phone, you cannot invest like probably, I don't know, like hundreds of millions at least in the phone business, right? Even $50 million, it's a lot for a company like NIO. I have no clue how much it is, but I would say like it's at least tens of millions, probably a couple of 100 million investment in that phone business. Then recently we've seen these discussions about, look at the, for example, the swap stations, right? Follow this gentleman on Twitter, on X, and you can see that past 24 hours, almost 87,000 swaps per day, right? And I mean, it's just like, yeah, so 87,000 swaps per day, averaging roughly 25 swaps per station. Remember that I've been telling you, like, hammering on this point. The Gen 4 stations can handle like multiple hundreds of swaps a day, like maybe anywhere, the Gen 3, I don't know, like maybe high 200s to the Gen 4's 400s maybe. And they are doing like 25 swaps per station a day on average. So they are nowhere near the limit, right? So they invested so much money in building out the swap infrastructure. And now there's discussion about, you know, selling a huge portion of the swap business essentially, or the energy business of NIO to other partners, right? And if NIO, I mean, you and me and all of us invested in NIO mainly because the battery swap stations and the, you know, this uniqueness of NIO as a business. And all of a sudden you're telling me, because they were so lazy with their cost structure and planning for the future in the last 2 or 3 years, that they now ended in a situation where they have to sell part of the, you know, NIO energy business. They have to sell part of the NIO chip designing, right? Remember, they have their in-house chip designing their own chips, competing with NVIDIA. At least that's the target. I mean, the idea is great. You know, they're gonna save a lot of money if the volume of the sales goes up, like in the multiple hundreds of thousands of cars. Currently, they had a couple of 100,000 last year. This year, we are gonna get probably close to, I don't know, 300 to 400,000 cars for 2025. But again, the target, and I think that goal is at least a great target for the future and a great vision. But because of the mismanagement that they've done, they're now in a position where they have to actually sell part of the Neo chip designing business, right? So they invest a lot of money in it, and now because of the mismanagement, they have to sell part of it. And this is the same scenario with Neo. So when I'm talking that the window of success is very, very thin right now for Neo, simply because they don't have so much cash left. I mean, last time we looked at it, I mean, what was it like? Cash position in Q1 was like 3.6 billion or so. Sure, they raised what? I think that in April they raised $500 million or so. Let's say 4 billion by I don't know, April or May, and another, like, let's say realistically 600-700 million in net loss in Q2, which will be reported in a few weeks from now. We are back to like what, 3 billion roughly, 3.2, 3.3 billion in cash. So they cannot afford like a couple of quarters of $1 billion or so net loss. I mean, they simply cannot do that. So this is just a big no. So the red flags are there, and it's now. Like when I'm not, I mean, by this time you might have seen my videos. I'm not trying to be clickbaiting, but when I say like this is the end is close, or it's make it or break it for Neo, last chance or whatever I call it. I mean, I truly mean it. Like they don't have enough, so much money left, so they cannot afford any big mistakes. And again, I'm not trying to be negative. I'm telling you as I see it. Like lithium carbonate price going down is gonna affect them on a good, on a positive note. The Onvo L90 and L80 potentially sharing the same technology, really nice. Hopefully cut down on a couple of models, you know. And again, one of the biggest issue with Neo every single year. Remember when Tesla investors talked about the Tesla sales of Model Y being low a couple of months ago, because the updated, the refreshed Model Y was coming out, because the potential customers knew that 6 months, 4 months from now the new updated model is coming out, so they wait and they don't buy the old car, and they wait for the new one, right? Tesla has essentially Model Y and Model 3, sure, X and S, but I mean there's such a like 5% of their sales or so. Now then you go to Neo and you have like your 12, 15 models, right? It means that at any given time, any given year, at least 3 or 4 models are gonna be in a refresh cycle, right? You have 3 or 4 times a year where a few of these cars are gonna be like a updated 2025, 2026 model refresh year. So people are waiting every single year just because they have so many models. And this is also like self-inflicting wounds. Why do you even need that? Like, I mean, reduce the 85 Touring or the 85, like the one that sells less, just reduce it, like completely remove it. ET7, the same thing, like, all these SUVs, like mid-size SUVs competing with each other, then you add Onvo to it, and I think a lot of cannibalization will continue to happen. So they should reduce the traditional Neo brand, at least with a few of the cars, the ones that are simply not selling well enough, and try to focus more straightforward with their sales team on the fewer models. I think that's much better business idea, and potentially save them quite a lot of cost, both in R&D and also in the sales kind of part of the business, and as well like reducing the times that people or potential customers are waiting for updated model years. So anyways, this is how I see it. I still like stand by my own opinion that the window of success for Neo keeps shrinking. The CEO and the management cannot afford any more mistakes. Like this is make it or break it for Neo right now. They can get quite a nice success. I wouldn't say that Neo is doomed, not at all currently. But if I see like a couple of quarters of like above 800 or 900 million net loss, then we are in really deep trouble for real. Currently, there's a lot of red alarms, but there's still time to save it. But for the love of God, William Lee, you have to get your stuff together. So anyways, thanks for your time. Please like, subscribe, and comment in the comment section. And see you in the next one.